Emergency approval as infections hit an all-time high. Welcome to the program, everybody. Just 20 seconds or so to go until the start of the European equity trading session. Euro Stoxx 50 futures point to the downside. FTSE futures look more positive, reinstating that negative correlation between the pound and FTSE futures, perhaps, or pound and FTSE. Last week, we seemed to see both of those going higher. Today, things look a little different. So that's the picture on futures, and it's a little unclear as to whether we're making progress around these Brexit negotiations. We'll get to that conversation shortly. Matt, tell us how these European equity markets are opening up.
Yeah, let's take a look here. The FTSE, the first out of the gate, and it's really little changed, but moving higher, about 0.1% right now. And you can see that the pound is down. Anna, we were talking about this before the show. You know, typically there's an inverse correlation, but it has been a positive correlation of late. So this is a little bit of change from what we've seen over the past week. The pound dropping down below 134. Stocks actually benefiting from that. FTSE stocks benefiting from that. You see the IBEX opening up down 0.6%. So the biggest loser on the continent thus far. The DAX here in Germany down 1/3%, and the CAC 40 down about 1/4%. So you're going to see continental indexes fall this morning as the FTSE rises just a little bit. Meanwhile, Brexit negotiators are striving to finalize a deal by this evening after resuming talks yesterday. Both sides are denying that a compromise has been made on, or has been reached on, fishing, despite earlier reports. And we've heard from the Times that Merkel and Macron are thinking about softening their stance on a level playing field, at least according to one source. Joining us now is Flavia Kraus-Jackson, Bloomberg's European government managing editor. So Flavia, we keep hearing, you know, maybe they're going to reach a deal on one of these two hurdles, and no, they're not reaching a deal on either one. How do things look right now?
Well, it's the classic Brexit Groundhog Day, isn't it? 2 steps forward, 1 step back. Yes, indeed. Last night we did have some reporting that seemed to indicate that on the tricky issue of fish, there was what have been referred to as political landing zone, meaning the makings of a possible compromise. Of course, we have to remember that the other big obstacle in this is the so-called level playing field, which basically would mean that the UK would have to abide by EU regulations, and that's where the fight is, whether it's retroactive but also in the future. And that appeared or emerged as the bigger issue. Of course, this morning, Barnier has briefed the EU ambassadors and said it's all terrible and nothing's changed. I think we have to factor in that there's a lot of political posturing. What is clear is that the mood has soured. And as much as we keep saying that, you know, time is running out, it really is at this point, partly because there is this summit at the end of the week that sort of feels very much like the last hurrah for anything.
Yeah, tell us, Flavia, about some of the timing here. We're seeing that the UK's Michael Gove is to meet with the EU's Šefčovič for talks on Northern Ireland, that coming through this morning. We also know that Ursula von der Leyen and Boris Johnson are scheduled to talk once again tonight. They talked over the weekend, didn't they? Things pushing ahead, I suppose, to Thursday. Is that starting to look like a new deadline?
Yes, it very much is. So, I mean, Michael Gove is, in fact, should be there at the sort of 9 a.m. In an hour. And the idea behind that is, you know, whether the UK will sort of remove the sort of these offensive clauses as a sort of olive branch, you know, because it seemed a little bit sort of in your face. How can you actually sort of have a deal if you're sort of pushing through with this this internal bill? So that's one element. And then, of course, yes, there is the summit where the EU leaders are going to be dealing with another problem on their doorsteps, which is Poland and Hungary, essentially holding up all the financing and the funding for the budget. So it really is not ideal for them to be sort of dealing with both those issues at the same time. One thing that has emerged, and it's a sort of slightly frightening thought for those of us who've just been covering this for so long, is the idea of, you know, in a way, there is going to be a tariff system, and then negotiations are going to sort of resume in the new year, and, you know, eventually there will be a deal, but again, there'll be another sort of kick down the road again.
Yeah, we're seeing some significant movement on FX markets all around this, Flavia. We'll keep everybody informed on that. Thanks very much for joining us, Flavia Kraus-Jackson, Bloomberg's European Government Managing Editor, joining us there. And we are seeing substantial move, as I say, down around 0.7% now on cable, 133.44. We started this morning with a 134 handle. We've lost that down to 133. Let's get to the FX markets, and it's not just, of course, around cable we're seeing this. We're also seeing this in euro pound as well. Simon Harvey from Monex Europe joins us, where he's an FX market analyst. So, Simon, perfect person to speak to today. We're seeing, just as European stocks start trading at the turn of the clock, moving to 8 o'clock UK time, the pound takes another leg down. What do you think it is that's particularly spooking markets this morning? Is it that people thought there'd be a deal over the weekend and there just wasn't, or what's happening? Why the pound so weak?
Good morning, and you know, Monday morning, are we really surprised? You know, it's Brexit week. How many times have we been here? There was a flurry of sterling strength against the dollar and against the euro back on Friday evening, and this was a lot of positioning. You know, the kind of the rumours that Barnier was going back to mainland Europe. Everyone kind of took this as the deal is almost done. You know, we've heard sentiment previously; it's 95% there. There's a few hurdles. But Barnier going back to the mainland, everyone took this as, well, you know, we could get something over the weekend, and FX markets always being forward-looking, we're actually positioning for this. And then now we're seeing, like we have done time and time again, that sterling's back under pressure because we haven't seen the breakthrough in Brexit negotiations, and we're back to square one. And, you know, it's just not surprising anymore. And we've just heard Flavia call it Groundhog Day. We've just she's just stated that potentially we could be going into the new year with this. You know, you can't write anything off when it comes to Brexit negotiations. You can't write anything off when it comes to volatility in the pound. You know, it's becoming a very high beta currency now. It's riddled with Brexit uncertainty. And it's just all the more intensive now, because you've got both sides under substantial economic pressure from the virus, and you know, a minimal trade deal is required for some sort of relief in sterling. But until we get that, just, you know, continue seeing red on your screen next to anything that's got GBP next to it.
We are seeing headlines now from UK tabloid The Sun. Simon, I'm not sure, you know, being not living in the UK, how widely read that The Sun is in the city. But The Sun is saying that the UK Prime Minister Boris Johnson is ready to pull out of trade talks within hours. If that were the case, what do you see sterling doing? Already dropping right now, 0.7% to 133. If the UK says, we're out, we're done, we're ready for a hard Brexit, what happens to sterling?
Yeah, the Sun isn't necessarily the most wide read within the city, but, you know, I would say it's gaining popularity because the last few reports they've had on Brexit have been bang on the money when it comes to, you know, pulling these rumours out. And then if this is true, we've always said, you know, that the pandemic's eroded much of the upside, along with the fact that the deal would be kind of minimal with regards to the pound and with regards to Brexit, but the downside very much still exists. If we're going to fall back onto WTO trade terms, we're looking at around 6 to 8% fall in sterling against the dollar, 4 to 6% in sterling euro, and these are sizable moves that everyone should be hedged and protected against, because the downside still exists. You still have the economic damage of pulling out the access of financial services, the blockade of goods and trade, potentially an Irish border in the sea. We're not too sure how that's going to play out anymore, because it's been kind of moved about a lot, but the downside still, very much exists for sterling and for the UK economy, because it's in a very fragile position at the moment. We're still seeing, data come in, and it's very soft. The last thing they need right now is kind of a stumbling on Brexit. Previously we saw the idea that fiscal stimulus would come to the rescue like a knight on a horse, but the fiscal stimulus tank's been emptied because of the pandemic. So what's really going to come to the aid for pound and for the UK economy if Brexit talks completely collapse? Well, it's going to have to be the Bank of England, and we've been calling this for a while. We won't see negative rates by the Bank of England next year unless we have a kind of a deterioration in the Brexit's outlook. And if this is true, what the Sun's saying, it's going to be a very long day for FX traders, for fixed income market traders. We're going to start seeing speculation again, negative interest rates from the Bank of England, and we're going to see a lot more volatility in sterling markets.
We're just looking, at sterling markets, and we're looking there at euro pound. Then, Simon, we're seeing it at spot 9077. I was just looking back at some history of where we've been on that particular cross, and going back to 2008, you have to go back that far to see levels in the high 90s. I mean, where do we get to? Do we get to parity on this one if we see no deal coming through, Simon? I mean, what are you looking at on euro pound?
We're not talking parity, but we're talking substantial sterling weakness, especially against the dollar. It's a bit more of a mixed kind of question when it comes to the euro, because they're also sharing some of the economic pain, but arguably nowhere near as much, because it can spread it out over a much larger economy. But we're talking substantial sterling weakness, and we call 4 to 6%. I'm not too sure where that takes us. I'm pretty sure close to parity, but not quite there. But the knee-jerk reaction most probably will take us there, because one thing we've learned over the last 4 years is that FX markets have got a massive appetite for trading and speculating on sterling with regards to Brexit. So there's a lot of positions in the market, whether it's short, long, that could be moved about very, very vigorously, and we could see substantial volatility. But all we're waiting for, we've heard rumours, we've seen headlines, we've had this headline risk over the last 4 years. We have not seen anything solid. We've not seen the final result yet, but because they've been kicking the can down the road. Once the road ends and the can hits the wall, then you're going to see where everyone really sits with it.
Simon, you live, sleep, eat, and breathe FX in the city. I believe it's a family endeavor for you as well. Is anybody talking about anything else right now? Are there any other pairs that we're missing, that we're overlooking because we're distracted by what's going on in sterling?
Yeah, I mean, sterling's always going to take the headlines just because of the volatility that comes from it. But, this week's busy for other reasons. We've got the discussions on the recovery fund. We've got the ECB. We've got the Bank of Canada. As an FX analyst, we love coming into these central bank meetings with a very kind of sensitive level on these currencies. And, with the loonie, it's not just going below 130 on dollar CAD that's the concern, or with euro going above 120. We shouldn't be looking at these kind of comments last few months from Philip Lane, or even back to the last Bank of Canada's discussion on the strength of the loonie. What we should be looking at is the trade-weighted values, and they're becoming very, very sensitive now, because the broad dollar weakness allowed these currencies to strengthen somewhat, and on a trade-weighted basis, they were still being kind of offset by rallies in other currencies that were major trading partners. But now on the trade-weighted basis, we're coming to very, very sensitive levels for these central banks. It will be very, very interesting. If you asked me to talk about on Friday, without knowing what was going on in Brexit, what the theme is for next week, I would have said jawboning by central banks. And beyond that, going into 2021, the big thematic trade that everyone's discussing is broad US dollar weakness. Now, we're kind of buying into this 2021 trade, but at the same time, I'll say it again, with the last 4 years, how many times have we discussed in December the broad US dollar weakness kind of thematic trade for next year, and whether it be, you know, kind of repatriation taxes, a US-China trade war, a pandemic, you know, all of these events have kept the US dollar elevated. So there is that risk going forward. You see headlines from Citibank, 20% fall in DXY. I don't believe it, haven't read the report, but, you know, that's a big, big move. So there is a lot kind of still going on in FX markets towards the end of the year.
Simon, thank you very much. Simon Harvey, Monex Europe FX market analyst. We were just showing you there some movement in gilt markets. Money markets now pricing a 10 basis point of Bank of England easing in December 2021. So interesting place to think about our Brexit conversations and how that links into central banking. Of course, over the weekend, we saw further officials from the Bank of England, or running into the weekend, Bank of England officials signalling openness to negative rates as a stimulus tool. So that conversation clearly evolving. Simon was mentioning the dollar. We'll get further thoughts from him on the dollar. The Bloomberg Dollar Index is a few points away from its weakest since 2014. Up next on the programme, we discuss more on that dollar weakness with Simon Harvey. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 15 minutes into the session right now, and we're looking at a bit of a mixed picture as we thought we would. Stocks in Europe on the continent are higher. Are lower, sorry. The FTSE in London is higher right now, although just fractionally, and the pound really is the big story, down 1% or more right now to 132.97. So we've seen it move in two sessions from a 134 handle to a 132 handle. Danny Berger points out there have only been 11 trading days this entire year where cable has closed down more than 1%. So it would be interesting indeed if we see it hold at this level. Now, of course, the other half of this picture is the dollar. And actually, we've seen relentless dollar weakness, the driving force in FX, typically, clearly not today against sterling. The Bloomberg Dollar Index is near its weakest since 2014. And Simon Harvey, Monex Europe FX market analyst, has just finished telling us a little bit about this. Simon, we were talking about, you touched on this at the end of the last block. And your point, I think, was that we kind of see this trend indicated often in December. What would stop this dollar weakness? What could turn it around in 2021?
Well, the kind of the 2021 outlooks that we've been reading and we've actually written ourselves, that are kind of looking towards dollar weakness towards the next part of the year, are all kind of based upon this US dollar smile kind of narrative. The broad assumption that a vaccine would be distributed and widely distributed in the first half of next year. You know, the kind of the different calls between different institutions depends on their assumptions of when this vaccine rollout is going to occur. And at the same time, the US dollar smile narrative hinges upon no US economic outperformance next year relative to the rest of the world. And this kind of still hinges on, we don't know the results of the Georgia runoff. You know, you could get kind of a blue sweep trade still coming back through and massive fiscal stimulus from the US. You know, we can't completely write that off, and that would allow the US economy to outperform somewhat next year, potentially leading to a further dollar weakness or dollar strength going that way. I think the biggest risk and the biggest known risk at the moment is the assumption of all of these forecasts on the rollout of the vaccine. It's all based upon very small preliminary trials of efficacy rates, and we don't necessarily know that this is going to allow the broad reopenings next year that everyone's necessarily anticipating. Now, when we're talking from an FX standpoint, you know, we're not epidemiologists, we're not experts in the field of kind of containment of viruses and so forth, but you know, you kind of have to then just take the medical advice from this. But if you're talking the biggest risk to this US dollar narrative, is that haven channel is reopened because the global economy can't bounce back as rigorously as everyone expected, because there's some sort of delay in the process when it comes to vaccinations and mass reopening.
Simon, thank you very much. We just keep on putting up those images of what the pound is doing this morning. We're seeing substantial moves. You can see it there, euro, pound, a move of 0.9%. And cable is currently down by 1.1%, just keeping everybody abreast of what's going on FX markets, on specifically UK assets this morning as we watch those Brexit latest headlines. Simon, thank you so much. Simon Harvey, Monex Europe FX market analyst. Simon will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. A lot could have changed in the next 40 minutes. So very good to check in with him at the top of the next hour on Bloomberg Radio. Coming up here on Bloomberg TV, IPO mega week. Airbnb and DoorDash are ready to start trading this week in their long-awaited listings. Is it going to be a really busy December for IPOs? Now, some of the uncertainties, Brexit aside, some of the uncertainties for global markets are behind us. We'll talk about that next. This is Bloomberg. Welcome back to the European Market Open. 23 minutes into our trading session. FTSE 100 just was holding its head above water, just dropping into the red, as you can see there. So had been going the other way from the currency. That would have been in keeping with paths of old. It was not in keeping with what we saw last week. Last week we saw both moving in the same direction, the pound and the FTSE 100, and perhaps we're reinstating last week's trend today. We see the pound at 133.02, down by a full % against the US dollar on nervousness around whether there might be no deal. Now, December is set to be the busiest year-end on record for initial public offerings in the US. This week, we'll see two long-awaited listings with Airbnb and DoorDash to start trading this week. They're set to raise a combined $6.2 billion US. Joining us now is Bloomberg's deals reporter Manuel Bagori. Manuel, really good to speak to you. We're sitting here preoccupied by the Brexit latest news flow, of course. So here in London, it does not feel as if the big unknowns of 2020 have been dispatched with. But I know from a global and perhaps from a US IPO perspective, a lot of unknowns have been overcome. So why are there so many IPOs taking place right now?
Hi, Anna, and great pleasure to be on the show, as always. That's a great question. I mean, we've seen a record year in IPOs, not just only in the U.S., but pretty much across the globe, especially here in Asia as well. And part of the reason is that some of the companies that were badly hit by the pandemic were waiting to see how the rest of the year would pan out. Now with more visibility about potential vaccine coming in over the coming weeks or months, and also the U.S. elections out of the way, I think companies are rushing to get across the finish line and sell shares before year end. But also, most of the companies that we've seen listing this year are technology related or e-commerce related, which has been one of the subsectors that have benefited greatly during the pandemic.
Yeah, been doing very well and want to cash in on that. The question is, are they going out on a high? Manuel, thanks so much for joining us. Manuel Bagori there, Bloomberg's deals reporter. I'm guessing we're going to be talking a lot more to Manuel in the future because this trend doesn't look like it's set to peter out anytime soon. Take a look at the pound right now, down more than 1%. You can see it trading 132.92, so down around the session low and dropping from a 134 handle on Friday. This on concern, of course, that we could see, the Sun says, the British Prime Minister Boris Johnson pull out of Brexit talks. And we've had comments from the Irish Minister O'Brien as well.
Yeah, absolutely. So the foreign minister, the Irish minister O'Brien also saying, adding his thoughts, saying, we have worked through Brexit problems before, still hopeful of a deal. We'll continue to get the latest on the Brexit negotiations as they unfold. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the session right now and essentially on Brexit watch. You can see the FTSE right now turned lower. It had been higher earlier as the pound traded down. The pound is trading down now even more substantially, 1.25% to 132.72, and we do see the UK 10-year yield coming down as well to less than 30 basis points. It's interesting, you know, the pound weakness is significant. Danny Berger pointing out earlier that we've only seen the pound close down more than 1% 11 times this year. And we see a big jump as well in the Bloomberg dollar index, right now trading at 1133, the other side of that cable equation, of course. But across FX, you see some really serious movers. In equities, you see some movers in the UK as well. Anna?
Yeah, absolutely. Let's get to some of those. I want to show you what's going on with Games Workshop, Pandora, and also Lloyd. So Games Workshop and Pandora both putting out trading updates this morning, and both of those moved to the upside. Lloyd's moving to the downside, down by 4.6%. Brexit-sensitive stocks moving lower, as you might expect. We've seen a sizable move in the pound, as you pointed out, Matt, 1.3% or so. Now, 1.2% is where we move on cable, just reflecting the repositioning after the weekend where we didn't see a Brexit deal, and we're seeing some of the similar dynamics play out in certain stocks that are very exposed to the UK economy. Lloyd's would no doubt qualify for that. As I mentioned, Pandora and Games Workshop, both of those giving trading updates. Pandora, in particular, talking about the strength online, which seems to have lifted its stock by more than 4%. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Trump says his attorney, Rudy Giuliani, has tested positive for the coronavirus. The New York Times says the 76-year-old was admitted to hospital yesterday. The president wished him well in a tweet, saying, "We will carry on," while Giuliani's son tweeted that his father is getting great care and feeling well. The UK is gearing up to deploy its first COVID vaccine, with plans to provide the shot at more than 1,000 centres across the country, starting on Tuesday. The US, meanwhile, could approve Pfizer's shot for emergency use as early as Thursday. That's as Los Angeles County adds more than 10,500 new cases, hitting a record for a fourth straight day. The US is said to be ready to sanction more Chinese officials over their role in the recent disqualification of Hong Kong legislators. According to people familiar with the plans, the latest round of sanctions could be rolled out as soon as today, with as many as 14 people reported to be affected. Joe Biden has picked Xavier Becerra as his Health and Human Services Secretary. The California Attorney General will lead efforts to curb the coronavirus pandemic and to strengthen the Affordable Care Act. The president-elect's priorities in tackling the virus will likely include expanding testing, improving access to PPE, and distributing a vaccine. If confirmed, Becerra would be the first Latino to head the U.S. Health Agency. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
All right, Laura, thanks very much. Now, Brexit negotiators striving to finalize a deal by this evening after resuming talks yesterday. Both sides are denying that a compromise has been reached on fishing, despite earlier reports. And we've also seen a headline in The Sun that Boris Johnson may even pull out of talks within hours. Joining us now is Bloomberg's Maria Tadeo in Brussels. Maria, we're definitely seeing signs of concern in the FX market, with the pound falling down below 133. What are you hearing?
Yes, and Matt, it really does respond to this change in narrative that we've seen over the past 2 hours, in which Mr. Barnier goes into a briefing at 7:30 in the morning here in Brussels, which I would say is very early for Brussels standards, by the way, and that he says that he doesn't really see much optimism, that the three sticking points remain, and very much pushes against this idea that there has been a breakthrough on the fish. Now, European diplomats have also been telling us this morning that this has not been agreed, that there is nothing that looks like a political landing zone for the the sticking point that is fish, which for the French is a huge concern. And now we have another European diplomat. Remember, Barnier is now briefing members of the European Parliament, saying that at this point he does believe it could go either way. This is a diplomat, not Barnier, just to make it very clear, and that it very much depends now on the United Kingdom. And this is what the EU has been trying to do over the past 45 minutes, to flip the narrative and say, we want to get a deal, we want to continue to talk, but it really comes down to the Prime Minister. The pressure is on him, not us.
Right, and remind us of the situation with the level playing field then, Maria, because they maybe have, maybe haven't made progress on fish, but certainly there haven't been reports of progress on level playing field, and that could be a much more substantial sticking point.
Yes, and it could be because, Anna, this is a huge area. You know, whenever someone here or in London, I'm sure, tries to really explain what this level playing field would encompass, it's huge. It's from labor laws, it's the environment, it's future regulation, it's competition. It really is everything, and it very much comes down to what kind of relationship does the United Kingdom want to have with the European Union. The EU has said we can be very good trading partners, but for that to happen, you need to stay closely aligned to our rules or regulations. That really defies the point of Brexit. This was all about taking back control. It was all about making your own rules and your own regulations, and that will be, to some extent, the big political calculus that the Prime Minister is going to have to make in the next 48 hours to see whether or not this hypothetical technical deal, this future deal that could be put on paper, does pass the Brexit sovereignty test. And that's a question that I guess he can only answer himself.
Okay, so what's the latest on the timing then, Maria? Who's talking to whom, and when can we expect to see any firm progress here?
Well, Matt talked about these headlines coming out of the Sun newspaper saying that the Prime Minister is ready to walk out. He could potentially say this tomorrow if the talks do not go well, but there is a very key, important phone call that is going to happen this afternoon with Boris Johnson and the head of the European Commission, Ursula von der Leyen, that could really set the tone. Even if that goes well, though, it's a reminder that Ursula von der Leyen does not speak for the EU 27 leaders. This is the executive, this is the Commission. So the real deadline, and I talk from a European perspective, is now seen as the European summit that is scheduled to take place in person here in Brussels Thursday, Friday. That is when a political decision on a future deal would be taken by the European leaders in unanimity. If a country does not agree, as you know very well, then that deal would not happen. So very much seen towards the end of the week, not here. And even just to stress it very much, even if you do get a technical deal, you do need the approval from the EU 27 leaders. Again, that only happens later in the week.
You know, we saw headlines in the Times saying that Merkel and Macron were going to soften their stance on the level playing field. That sounds very un-Macron, to be honest. But we, even with the strength, only see the euro buying 91 pence right now. How painful would a hard Brexit be for the EU? I mean, how much do they really care, Maria?
Well, look, how much do they care? That's a good question, because if you ask European diplomats today on a Monday, how much do you worry about Brexit? They tell you we worry a lot, but we also have a big decision coming up from the European Central Bank, and we also have our own big internal clash happening with Viktor Orban and the Polish, too, on that front. So if you're a Spanish or Italian, you really care about that, and perhaps not so much Brexit. How much do you care overall? Clearly, they would tell you it's better to leave with a deal that does provide a smooth relationship going forward, especially in the context of a lot of the uncertainty that is coming through coronavirus. If you ask someone in France, Belgium, the Dutch, do you care about fishing? Is that a big thing? They'll tell you it really is, because it could be very problematic for those industries going forward. And again, you know, are they ready? They'll tell you yes, they are. Are they really in practice? Where we're talking about 2 weeks to step up no deal preparations. We're talking about very much little time, few time to get ready for a no deal. So I guess if you ask them, do you want a deal, they'll tell you, well, we probably do want to get one, just to avoid that uncertainty.
Maria, thanks very much. Bloomberg's Maria Tadeo joining us there from Brussels. We'll continue to keep across, of course, all the latest lines coming out of Brussels and London with regards to Brexit. Up next, the positioning around Brexit. Goldman Sachs strategists are telling investors to start a buying spree of abandoned UK assets. More on the markets next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open right now, 40 minutes into the session, and we're looking at a big drop in the pound. You can see here right now down more than 1% to $1.3286. We've seen the FTSE now turn down to join the currency, trading down about 1/3%, and the 10-year yield is also falling down below 30 basis points as traders continue to be concerned about the state of Brexit negotiations. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Goldman Sachs is weighing plans for a new Florida base for one of its key divisions. Executives are said to be scouting office locations in the south of the state with a view to relocating its asset management arm. If confirmed, the move would be a blow to New York's stature as the home of the U.S. financial services industry. DoorDash and Airbnb are set to start trading this week in what's likely to be the busiest year-end on record for U.S. IPOs. The two startups are aiming to raise a combined $6.2 billion at the top end of their price ranges. DoorDash upped its price range in a filing on Friday. Airbnb, meanwhile, is also said to be planning to increase its pricing, which could give it a valuation of as much as $42 billion. Shares in JD Health International have jumped as much as 27% in grey market trading in Hong Kong today. The firm said the retail portion of its offering, part of the city's biggest IPO of the year, was 422 times oversubscribed. Walmart is reported to have hired Goldman Sachs to assess a U.S. share sale of its Flipkart unit to raise around $10 billion. Indian financial paper Mint says Walmart plans to sell about a quarter of the company, which is India's largest online retailer. Flipkart's valuation has more than doubled to $40 billion since Walmart bought it in 2018. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. So the pound continues to weaken further this morning, with investors still questioning whether Britain and the EU are close to reaching a final trade agreement. At the same time, options traders are taking no chances. Danny Berger's here with the details. And I see, Danny, a UK official says Brexit talks are likely to end today if there is no progress. So we'll all look for that. How are the options markets positioned then?
And we're definitely seeing some reaction now. At first, it really looked like the majority of the reaction we would see is in the cash market. And I have to say that is a tad of what we're seeing. We had that gap open when trading first kicked off, and we continue to see further weakness in cable, now well on its way to decline more than 1%, something that's rarely happened this year thanks to the weakness in the dollar. But the reason the cash market seems to be the more reactive one is because the split in positioning, options have tended to be more bearish than what we've seen in the cash market. But that does not mean that in the derivatives market there's been no reaction. Just in the past few minutes alone, we've seen this jump down here in euro pound overnight volatility. The dollar one looks somewhat similar, but it's not as drastic, which is why I point this out. We see this jump of traders trying to protect against potential volatility in this pair, the most since really the peak of the pandemic, or at least the first peak of the pandemic. But this isn't the case across all options. And a lot of traders I've been speaking with have gotten burned by previous option bets surrounding the Brexit drama because we continue to get this back and forth. There's no outcome. Things continue the same, and the dollar story really tends to dominate. So let me show you what happened in 1 week risk reversals. As soon as we get more headlines hitting the market saying that it's unclear whether a deal will be reached, perhaps talks will end today, we first get this spike up in volatility, protection against further losses versus the euro. But then look, it basically flattens out to what we've seen for most of the day. We have to remember the options market was hedging against losses in the pound, hedging against the possibility of no deal, and that continues to be the case. The really big reversal that we could see is if a deal does seem certain, that's when we get more movement in these options. Anna, Matt?
All right, Danny, thanks very much. Danny Berger there talking to us about what's going on right now in cable. We're watching very closely as the pound falls below $1.33 in value. Now let's get to the car industry. Luxury automaker Daimler says a tough restructuring program to cut costs and lift returns has helped it weather the pandemic. keeping cash margins healthy. I asked the CEO, Ola Källenius, about demand returning across Europe and North America, and when he expects business to return to pre-COVID levels.
From today's perspective, 2022 is probably a pretty good estimate, but we're flexible, we're ready. Should, with the vaccine and the things that are coming now, should the market come back faster, we'll be able to react for that. But we have also made adjustments to our cost structure and have very strict cash management. So even if the market is not on that level, that we can protect healthy margins and healthy profitability at somewhat lower sales volumes.
Here in Germany, there's a prolonged lockdown in many parts of the Western world. Does that make you have to rethink your most recent forecast that we got in October?
For now, the situation is fairly robust for us. I think two factors are key compared to what we had in the lockdown in April and May, or March, April and May, is our dealerships are open. And maybe even more importantly, the registration offices where you register your car, they are also open. Should they shut down, of course, that would have an effect, but it's not the case as we sit here today. But we watch this situation very closely, very carefully to make sure that we always keep an equilibrium between demand and supply in this unusual situation.
I have spent some time over at the Salzuffer dealership during this lockdown. Of course, with restaurants and bars closed, there's not a lot else to do. Do you find more people coming into your dealerships now, or are the concerns about lost revenue for the consumer on the street outweighing that?
One thing I believe the pandemic has highlighted is something that we have always taken for granted. It's personal, individual mobility, personal freedom. And to have that now, it's almost like it's a reminder to you. So yes, in the absence of going on vacation and spending money on a lot of other things that you normally would do, maybe one factor that has helped us come back in this second half of the year is indeed people looking at a car. So some of that available spend obviously is going towards us. And if you can't do anything else, you're always welcome to stop by a Mercedes dealer.
That was the CEO of Daimler, Ola Källenius, talking to me about, well, we talked for, I think, like 20 minutes. I'm relatively obsessed, I guess, with cars, but it was great to hear from him, and he has a fairly optimistic point of view, even amidst the pandemic, and it seems to be worsening, and certainly, from my perspective, was outweighing Brexit concerns from this side. Källenius has said a hard deal or no deal Brexit would cost Daimler hundreds of millions of euros.
Yeah, it was actually remarked upon over the weekend in the UK by some commentators, the fact we weren't flooded with messaging from German exporters suggesting that a deal must be done. That was in itself interesting. Of course, here we are much more obsessed with Brexit perhaps than you would be, Matt, and that is completely understandable. In terms of the latest news lines influencing UK assets, you see the pound at 132.76. We started this morning with a 134 handle on cable. That has gone. We're now down by 1.2%. We are hearing from a UK official that the Brexit talks will likely end today if no progress is made. That is the important caveat to put on there. We do understand that Boris Johnson and Ursula von der Leyen are supposed to speak later on today, so we will wait for the outcome, perhaps, of that important conversation. Coming up then on the programme, how will a Brexit deal, if we finally get one, impact risk assets? We'll put that question to the Market Live team and to Eddie van der Walt. That's next. This is Bloomberg. welcome back to the European market open. 53 minutes into a trading session that shows UK assets under pressure, certainly the case for the UK currency. The FTSE 100 is also in negative territory now. It started out with that sort of negative correlation with the pound, but that didn't last long. Now, as coming to the downside, down 0.2%, the pound down by 1.3% this morning. Also a bit of movement on gilts to keep an eye on. Joining us now is Eddie van der Walt, Markets Live editor. And just these latest lines on Brexit keep on coming, don't they, Eddie? The latest line from the Irish, who'd been pretty optimistic for a lot of last week. The Foreign Minister, Coveney, saying a Brexit deal certainly looks very difficult at the moment. The EU talking about Thursday as a deadline. The UK side, though, saying that they really need to see progress today. And that seems to be the latest news flow, if you like. How is this expected to stick to risk assets as a whole? What kind of commentary are you getting on the Markets Live blog?
Yes, and I mean it's pretty interesting, particularly given that we heard the Irish Foreign Minister previously saying that 97% of the trade negotiations are done. For him to now sound more cautious is fairly worrying. And I think, risk assets across the board will move on this. What we've seen so far is that the pound has been particularly volatile, but the pound in turn moves the dollar, the broad dollar index, and the dollar moves everything else. So, we've seen gold drop on this morning. And then, even across commodity markets, there are pockets where you will see impact. And of course, UK equities and European stocks and so on. I think there's quite broad risk on the table today.
Yeah, even Bitcoin moved on this. We were up to $19,430. And we're back down now on Bitcoin. Gold, as well as you mentioned, down to 1828. In fact, most commodities are down as the dollar index moves higher. What do you expect from the dollar index if there's no deal? Obviously, it hits the pound hard. Does that continue to boost BBDXY?
Yeah, I think so. I think the assumption here is that the assumption has for a long time been that the way that it works in Europe is, crunch talks up to the last minute, up to midnight, and as the clock strikes, we get this last minute push through with a deal. And I think people are just starting to question that now. If we really do not get a deal and we're talking about, and talks don't continue, all of that, I think, yes, the pound moves significantly lower. Even the euro is a little bit weaker as a result of that, and therefore the Bloomberg Dollar Spot Index pushes higher, which feeds through to the dollar, rather feeds through to gold and everything else.
Eddie, thanks so much. Yeah, so through the dollar, all kinds of other assets become involved. Eddie, thanks so much for joining us. Eddie van der Walt, Markets Live editor. That is it for the European market open. Stay with Bloomberg Television. Surveillance is up next. It's a foggy start here in London. This is Bloomberg.
On a knife edge, the pound sinks on reports Boris Johnson is close to pulling out of Brexit talks. Michel Barnier says they're not close to a deal yet. The rollout begins. Coronavirus vaccines begin in the UK tomorrow. The US may follow suit by the end of the week if the FDA gives emergency approval as infections hit an all-time high. Plus, an exclusive conversation with the UBS chair, Axel Weber. We'll talk the future of European banking. And, of course, we'll talk about the pandemic. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, first thing is first, let's check quickly on the markets. Now, if you look at the markets, a lot of them are looking at some of the concerning news, or at least news that Brexit is not going the way that certain markets were hoping. You can see the Stocks European 600 down some 0.7%, and then I'm looking firmly at pound to see any kind of swing on that. You can see cable at 132.43, and then euro sterling 0.9129. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. A British official says Brexit talks need to show progress by tonight if they are to continue. The European Union's chief negotiator, Michel Barnier, meanwhile, is said to have denied any breakthrough on the issue of fishing rights. Prime Minister Boris Johnson is due to speak with Commission President Ursula von der Leyen this evening to discuss the state of play. President Donald Trump says his personal lawyer, Rudy Giuliani, has tested positive for coronavirus. The New York Times says a 76-year-old was admitted to hospital yesterday. The president wished him well in a tweet, saying, "We'll carry on," while Giuliani's son tweeted that his father is getting great care and is feeling well. The US is said to be ready to sanction more Chinese officials over their role in the recent disqualification of Hong Kong legislators. According to people familiar with the plans, the latest round of sanctions could be rolled out as soon as today, with as many as 14 people reported to be affected. And Joe Biden has picked Javier Becerra as his Health and Human Services Secretary. The California Attorney General will lead efforts to curb the coronavirus pandemic and to strengthen the Affordable Care Act. The president-elect's priorities in tackling the virus will likely include expanding testing, improving access to PPE, and distributing a vaccine. If confirmed, Becerra would be the first Latino to head the U.S. Health Agency. Goldman Sachs is weighing plans for a new Florida base for one of its key divisions. Executives are said to be scouting office locations in the south of the state with a view to relocating its asset management arm. If confirmed, the move would be a blow to New York's stature as the home of the U.S. financial services industry. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, let's get the latest on the pandemic and the global economy. Virus numbers continue to rise, with President Trump saying his lawyer, Rudy Giuliani, has tested positive. Now, the administration says all Americans who want a vaccine should be able to have one by the middle of next year, as several states set infection records. Meanwhile, the UK is set to start rolling out the vaccine tomorrow. So is there light at the end of the tunnel? And what does it mean for markets? What does it mean for the banking sector? Joining us now for an exclusive conversation is the chairman of UBS, Axel Weber. Axel, as always, thank you so much for giving a little bit of your time to Bloomberg. First of all, when you see the vaccine and how quickly we got to a vaccine, and we probably have 3 viable vaccines right now, what does it mean for the economy? Are we going to see a sudden boost from the vaccine, or is it just that the scarring that we could have expected will be tempered somewhat?
I think it's a bit of both, Francine, and good morning, and thank you for having me. We just made a new forecast, and we've actually turned our optimistic scenario into our main scenario. So it shows you that most of the forecasts are heading into a better direction. But I'm continuously warning that whilst the outlook is somewhat better, we will not get out of this very, very quickly. We expect to get close to herd immunity sometime during 2021 for the major economies, which means that the 2 vaccines that have shown to be very effective, plus the sort of immunization that comes from those that have recovered, is going to help us to come down to very low numbers of new cases, and that's going to change the mood in the economy. So we expect a pretty strong rebound. Of course, it depends on other things as well. For example, in the US, it depends on the size of the fiscal package. There, we're expecting more of a mid-sized package around 480 billion rather than the 1 trillion that is frequently talked about. So there are signs in both directions, but this will take a long time for things to go back to normal. It'll only be next year in some of the major economies where we go back to pre-crisis levels of GDP, and it will be a long haul to go to pre-crisis growth paths and for unemployment to come down. So no quick fix here.
So what does it mean for the kind of rebound that we'll get? Can it actually be sooner than expected and a deeper rebound? And what does that mean for markets? Have they gotten ahead of themselves?
Well, I think markets are pricing in sort of the end point of the trajectory that we'll see. We'll expect a pretty strong rebound, basically in the U.S. We expect just under 4% growth, 3.9% in 2021 and 3.8% in 2022. But the point is, these are average projections. There's many upsides and many downsides around these projections. At the moment, it's not sufficient to focus on forecasts alone. You need to think in scenarios. It could be that basically the whole rollout of the vaccine or the production is delayed. There's less acceptance in the population for vaccination. So there are many unknowns that we need to look into. And I'm warning a bit against focusing too much on your average projection. We really need to think in scenarios. And there is some downside in the U.S. in particular around, whether there will be a divided or a sort of democratic sweep or a divided Senate. And that will have implications for the course of fiscal policy. So many unknowns still and, quite an uncertain outlook. But it's a better outlook than we had a couple of weeks ago.
You also have a new chief executive in charge at UBS, Axel Weber. How's he settling in? Is there any points that he wants to focus on or change the direction for UBS?
Well, I think like every time, I'm a firm believer that, somebody who's come into the job, he's doing a fantastic job. He's really settling in with the team very well. They have many interactions with the board. The board, sees a whole new momentum in the team, and we will bank on that. And what we're seeing is they're taking a very close look at the various businesses because we're at a junction in the road here. Like in the financial crisis, the parts of what we've seen over the last couple of months will stay there for much longer than has been anticipated. And you really need to look at the bank and its profile in a post-COVID environment. Will we do as well as we've done over recent years? And that is what the team does. They'll take another sort of roughly 100 days or so to look into various aspects of the strategy. The board and management are focused on that. And we'll probably come out with some strategy announcement with our first quarter results or shortly thereafter. But I think this is something that requires a reasonably intensive look, and it requires time. And I live by the rule that everyone that's on a new job has 100 days to really sort out what he wants to do before we make big announcements around that. And we're giving ourselves that time to look into things. And you will hear from us, around the first quarter on what the future direction of travel will be. We're not in a rush to change things because we've had a pretty good year. It's been the best third quarter result in 10 years. So, we're doing well, but we need to prepare the bank for the future and for the more distant future. And there will be some impact of COVID, not just only in the short run, but also longer lasting. And that's what we're focusing.
Axel Weber, Credit Suisse's departing chairman basically intimated that there could be a deal on the cards between Credit Suisse and UBS. Would such a deal make sense to you?
Well, look, we've had that discussion over in the media for quite some while now. I would say two things. First is Europe clearly is ahead of a wave of consolidation in the banking scene. When I say Europe, I more mean the Eurozone and basically the European Union, because that's a single market and the banking market there is still fragmented. And so mergers among some of the major European banks to get a holistic access to the entire European markets does make a lot of sense. And I expect some dynamics there. On the domestic front, look, we're a very strong bank. Credit Suisse has done reasonably well. Switzerland as a country has come through as well. It's always accretive if two domestic banks talk about mergers, but they're very, very hard to implement. This is a very unusual time. This is very high uncertainty. And probably in such a highly uncertain environment, such talks would be much more difficult. So I don't expect these things to happen at the current juncture. I think this will be things that people will talk about for years to come before we see any concrete movements. The ones that are driving the consolidation are the ones that have problems. And neither UBS nor Credit Suisse, they are in that area. So I think this is not going to be something that you'll see any news from Switzerland anytime soon. We just had 2 new managements. The chairman over there is changing. My term is nearing an end.
Yeah.
This is not the time where you go into discussions like that.
Your term is coming to an end, but will you try and stay on?
Well, no, look, I'm pretty clearly determined. I've done this job 10 years. Ralph Hammers is the first of a generational change at the top of the bank. And, you know, as for Sergio, he left on a fantastic high note. I'm sort of wired along the same way. It's good to go when things go well, and I think a decade at the helm of the bank is a good time. In the UK, it's regulated that every 7 years there need to be changes on the top of the board. So I feel that a decade is a good time. And I'll still do things, so I'll be around, but it's probably time to pass the bank on to the next generation at some point.
Axel Weber, talk to me about a Brexit deal. So what's the hope for financial services at this very late stage?
Well, the sort of the severe part for us is financial services isn't really part of the discussion here. We have trade and the new relationship with the EU. It's questions like Switzerland has them with the European Union for many years. Who will basically call the shots when there is a dispute between the Union and the UK in the future? As for Switzerland, the European Union looks at the European Court of Justice as that entity. And it's been a difficult discussion in Switzerland, and I do not expect a less difficult discussion in the UK, if I'm honest. But in the end, I think both sides will come to some.
Yeah.
I think in the end, both sides will come to an agreement. It'll be more a transactional deal, and whatever is agreed will be subject to review, you know, at very high frequency annually. Take, you know, financial markets. If the union, like Switzerland, gets an agree on equivalence, because now the UK is super equivalent in every dimension, but that's only a snapshot in time. As soon as the UK uses its degree of freedom and changes the laws for financial institutions, it will be reviewed by the union, and Switzerland has just lost its equivalent for the stock exchange, not because of anything happening in Switzerland or in the European Union, but equivalence judgments, in my view, are a political judgment. It's a granting of market access by the European Union. It's not a reliable two-way contract that can be enforced by either side. So it really is a one-sided benefit that is granted by the union and can be withdrawn at the discretion of the union without really going into a deep discussion of why that is the case.
Axel Weber, thank you so much. The UBS chairman stays with us. We'll talk a lot more about Brexit. We'll talk also maybe about some of the policies and cross-border consolidation. Why not? I haven't asked Axel Weber about that for at least 2 weeks. Coming up, changing of the guard at UBS. What's in store for the world's largest wealth manager under Ralph Hammers? More with the lender's chair, Axel Weber. That's coming up next, and this is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get back to our exclusive conversation with Axel Weber, the chairman of UBS. Axel Weber, thank you so much for staying with us. We talked a bit about consolidation actually within Switzerland. What will it take for cross-border consolidation in Europe to actually happen?
Well, look, I think actually what the Europeans need to acknowledge is the way that they tried it so far to get a banking union hasn't worked. We still don't have a banking union. We're still quarreling about deposit insurance. We still don't have a capital market union. And I've been arguing for some while now that what Europe needs is a big bang at the top. It needs to create a new legislation that basically creates a European League of banks that can operate across the entire European Union, pretty much what the United States did with the National Banking Act. Mind you, that was in 1863. So Europe needs to have its European moment for a banking union and a capital market union. And that can only happen if there are European rules, European regulation, European supervision, European deposit insurance. And you only need that for the most global banks and for the most pan-European banks. You don't need that for saving banks and corporate banks, for example, in Germany. And I think that the deal breaker that so far existed, the differentiation in regulation across the union, that really needs to be revisited. Why should a German saving bank sort of become European? They should be regulated as a European bank, but there is room to maneuver for local rules. But the truly European banks need European rules. If we operate as UBS in Europe with 27 banking licenses and a 28 supervisor on top, so we're working from a piece of paper that has 27 lines drawn across it, and we try and make a plan on how to deal with all our clients across the union. You wouldn't start such a system if it wasn't historical. So you really need to reset now.
What does it mean for acquisitions for UBS going forward, Axel Weber? Is there something that would make sense for UBS, or do you want to more focus in Europe, or do you want to focus really on the US market?
Well, look, for us, I'm afraid to say that for UBS, the most important part is our home market, and then it's the US and Asia. Europe is sort of our fourth market that we focus on, and we're largely a wealth manager there. We don't offer retail banking. We offer asset and wealth management and investment banking services. And because they're more institutional businesses, especially the investment banking, we have more flexible rules across Europe than many others. So we focus very strongly on getting our business in the US going further. For us, the competition with US banks as a global leader in wealth management is really the number one focus we have. And Europe it's a great doorstep market for us from Switzerland, but we're not a European in the sense of Eurozone or EU bank, and therefore the focus is for us much more, as you said, on Asia and China on the one hand side, and on the US business, in addition to the domestic business.
For your outlook for the investment bank, how's your pipeline looking like compared to a year ago?
Well, I mean, we basically exceeded even the most optimistic forecast for the investment bank. But again, let me remind you that a large part of UBS profitability and also of our income comes from the areas that I mentioned. The asset management and the wealth management business is over 50% of our return. What we've tried to do over the last 8 years is uncouple somewhat from the volatility of investment banking returns by putting a larger focus on asset and wealth management and on the stable and very profitable domestic market. We succeeded in doing that, and we've seen that really pay off in the financial results since COVID has started. And so it looks to us still to be the right way. And what we need to do is accelerate now further to really accelerate the digital transformation of the bank, to bring digital services to the client front ends in wealth and asset management. Because with COVID, the one thing that wealthy clients didn't do that much is meet their client advisors, face to face. So we have moved to a much more digital offering there, but we can certainly also improve that digital offering, and that's what we're focusing our mind on. And Ralph Hammers, who's the new CEO, that's his key focus at the moment, to accelerate the digital delivery of UBS services in the core of our business, wealth and asset management.
Axel, given what we're living through, of course, hanging on to your top performers, should be a top priority. How do you do that in a pandemic?
Well, basically because, many of our clients have been with us for generations. The second advantage we're seeing is Switzerland is doing much better, not on the pandemic numbers, but on the economy. We know there is an inverse relationship between the severity of the lockdown and the economic performance. And Switzerland has had, very good numbers to start with. So we haven't really seen any large increase in credit loss expenses on the domestic front. It's trickling in, but it's really low by comparison to European banks. And the Swiss economy, in my view, will hold up quite well. Most of our lending, or at least a chunk part, 50% roughly, is to our wealthiest clients, collateral lending where they post some of their assets to us and borrow against them. Well, central banks have intervened so massively in the market. Most markets are up. The value of assets that has been pledged hasn't really suffered. Margin calls weren't really an issue for us at UBS. So we've been holding up pretty well given the circumstances because of the specific shape of our business and our credit exposures, either to the Swiss market, which is strong, or to wealthy clients whose portfolio have been strong. So far, I'm quite pleased with the way that we dealt so far with the crisis here at UBS.
Axel Weber, thank you so much, as always, for your time and insight. That is, of course, the UBS chairman joining us this morning. Now, coming up a little bit later on Bloomberg Surveillance, we also speak to the London mayor, Sadiq Khan. We'll ask him about Brexit, COVID, and, of course, lockdowns. That's at 11 a.m. London time, and this is Bloomberg. is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, here's what to watch this week. The UK's NHS is set to roll out the Pfizer-BioNTech vaccine after the country became the first Western nation to approve the treatment. Now, the ECB will also meet on Thursday, and EU leaders will meet in Brussels on Thursday and Friday. They will likely talk about the approval of the next budget, the ratification of the 2030 climate goals, and, of course, about Brexit. Now, coming up, is a Brexit breakthrough possible? Michel Barnier denies nearing a compromise on fish, while The Sun also reports that Boris Johnson is ready to walk away. More on all of the moving parts next. We'll, of course, be live in Brussels. It was interesting to also hear Axel Weber say he wasn't really expecting a deal by the weekend, but he thinks at the last minute there will be a deal. At the moment, it's just each side also talking to their own constituencies. Pound moving a touch. You can see cable 132.33. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Brexit negotiators are striving to finalize a deal by this evening after resuming talks yesterday. In a meeting with the bloc's 27 members, Chief Negotiator Michel Barnier threw cold water on news of nearing a breakthrough on fisheries. Meanwhile, The Sun reports that Johnson is ready to walk away from the talks. Well, for more, let's get straight to Bloomberg's Maria Tadeo, who joins us from Brussels. Maria, great to have you on surveillance. We're hearing some pretty conflicting reports that a deal on fishing is starting to emerge. What's the mood like in Brussels?
Yes, Francine, there has been a lot of headlines over the past 2 hours that signal there is no breakthrough on the fish. But what I would highlight is that the tone and the narrative here is really changing to become much more somber and pessimistic on this after Michel Barnier briefed European ambassadors today here in Brussels to say that the three sticking points very much remain, that there hasn't been a fish breakthrough. The Europeans are pushing back on that idea too, and that at this point it really will come down to the Prime Minister. What I would signal too is that today there will be a very important phone call between Boris Johnson and Ursula von der Leyen, the head of the European Commission. That could set the scene and the tone going forward. But when it comes to the actual deal, European diplomats will tell you that nothing will move until European leaders get together here in Brussels on Thursday, Friday to signal whether a hypothetical deal that gets put on paper, a technical deal, can fly politically. And until then, it's hard to see one diplomat telling us he sees this now as a 50-50 situation.
Maria, what happens in the next 24 hours?
Well, again, Francine, we're waiting for this phone call that will happen between Boris Johnson and Ursula von der Leyen. The Europeans are saying in response to those headlines coming out of the Sun newspapers that they are not going to walk out from the negotiation. If the Prime Minister decides to do so, that will be his move. That will be his decision. The Europeans will continue to negotiate until time runs out or there is a deal. What I would also argue is that there will be a point, and this is what I'm repeated many times here in Brussels, in which this will become a UK political calculus, and that is probably going to be done in the next 48 hours. The Prime Minister is going to have to decide whether or not this deal, this potential deal that could be put on paper, will pass his Brexit test. Is this about sovereignty? Is this about taking back control? And can he sell this as a line that will resonate to the Brexiteers? And that is really an answer and a question that he can only respond to himself.
All right, thank you so much, Maria Tadeo there in Brussels. Now let's look at market movement. The pound continues to weaken further this morning. Investors still questioning whether Britain and the EU are close to reaching a final trade agreement. At the same time, option traders are taking no chances. Here with the details is our Danny Berger. Hi, Danny.
Hi, Francine. Look, today's decline in the pound, they are certainly different than what we have seen, with losses nearing and at times more than 1.5% on cable today. We've only seen the pound decline this much over the past year about 5 times. That dollar weakening story really has been the dominating market force until days like today when you get this gap lower and we continue to see the pound not able to make up that ground that we usually are able to see it when we get losses in those twilight early trading mornings. Now, one of the remarkable things, though, isn't just what's happening in the cash market, it's the options market as well, because already the options market was very bearish about what was happening in the pound. Well, it's getting increasingly bearish. Here I'm looking at overnight volatility between the pound and the dollar, that cross. You can see it's jumped over here to its highest since the beginning of the pandemic. This is right now where options are pricing. These are the sort of losses it sees going forward. And it's not just an overnight volatility, it's also in risk reversal. So here I'm looking at euro versus pound. You can see that initially to start the day, it stays pretty steady. Again, this market was already bearish, already had investors taking hedges out against a possible no trade deal outcome from this week. But you can see it's jumped even higher. This also, the superlative, also the most hedges against the pound versus the dollar since March. So the options market diving further into that need for protection as the cash market itself also falls, Francine.
Danny, thank you so much. Our markets reporter there, Danny Berger. Now joining us is Kokou Agbo-Bloua, a global head of economics, cross-asset and quant research at Societe Generale to talk about the markets. Kokou, thank you so much for coming on this pretty volatile day because we're waiting for a Brexit deal. It could actually not come. What does it mean for risks out there?
Well, I mean, this is pretty crucial because a lot of investors have looked at the markets this way. So we are essentially facing 3 decision trees that are overlapping. So we had the US elections, the pandemic, second wave, and then Brexit. And one of the things that's pretty important is that the president-elect Joe Biden has clearly increased the pressure on Boris Johnson to find an agreement. And the second wave and second lockdown in terms of economic hardship has also put pressure on the EU and the UK to find a deal, because this would be otherwise having a self-inflicted blow to an economy that's already weakened. So now it's clearly a question about principles, sovereignty, etc. So it's really 50-50, and we'll see. We'll have to see later today whether we find an agreement. But it's clearly going to be a volatile set of hours or days.
Coco, when you look at some of the things that could worry the markets, is Brexit systemic? Or I feel like we've been here, right, every 6 months or at least every year of a no-deal Brexit. So are you comfortable with the fact that the markets would know what to do in case of a no deal?
Well, this is a good question because we've seen a lot of investors having unwound or been underweight UK assets. So if you look at the FTSE versus the S&P, both in terms of valuation or performance, or the sterling versus other asset, it has underperformed quite a bit, and there's a huge amount of risk premium around the Brexit effect. So a lot of investors have sort of made the decision not to get invested if they don't know the distributional outcomes, are not comfortable with the risk, and typically get invested once the visibility increases. So we saw the same pattern with the US elections, for example, where positioning were pretty low into the event.
When you look at global stocks, and we saw this, the start of a pretty incredible rotation, what are we going to see in the next couple of months and quarters?
Well, I think this is a fascinating situation because clearly the fiscal and monetary response has been unprecedented for a simple reason. This is a humanitarian crisis. There's lives at stake, almost like a wartime type of reaction function. When people's lives are at stake, the fiscal response is almost unlimited. So going forward, the market is pricing that financial liquidity and investors' risk appetite is going to bridge the gap between the short-term horrendous economic reality, suffering, inequality, etc., and the light at the end of the tunnel, which is what the vaccine mRNA technology is providing markets. So I suspect liquidity to drive asset prices over the next few months, and clearly the risk around safety or execution will drive volatility. So there's a big difference between a vaccine and vaccination.
So when will we have a clear idea of whether both work, Coco, and what does that mean for treasuries, for example?
Yes, so I think over the next 3 to 6 months, we'll have a pretty good idea in terms of the sort of execution process. We saw last Friday, for example, the S&P dipping quite sharply into the close when we had the announcement that Pfizer-BioNTech sort of delivery between the end of the year will be 50% what it was expected. But going forward, we expect the reflation story to continue. Treasuries are likely to be under pressure. Higher yield is pretty much the way to play things. And we think that a lot of rotation away from credit and government bonds into equity and risk assets, and also green ESG-driven themes are likely to be the key driver going forward.
Coco, thanks so much. Coco Agbo-Bloua from Societe Generale stays with us, and we'll talk a lot more about the great rotation. Coming up, backing a stimulus bill, GOP Senator Bill Cassidy says it's likely Trump and McConnell will be on board. More on that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is gearing up to deploy its first COVID vaccine with plans to provide the injection at more than 1,000 centres across the country starting tomorrow. Meanwhile, the US could approve Pfizer's jab for emergency use as early as Thursday. That's as Los Angeles County adds more than 10,500 new cases, hitting a record for a fourth straight day. Now, President Donald Trump says his personal lawyer, Rudy Giuliani, has tested positive for the coronavirus. The New York Times says a 76-year-old was admitted to hospital yesterday. The president wished him well in a tweet, saying, "We'll carry on," while Giuliani's son tweeted that his father is getting great care and is feeling well. DoorDash and Airbnb are set to start trading this week in what's likely to be the busiest year-end on record for US IPOs. The two startups are aiming to raise a combined $6.2 billion at the top end of their price ranges. DoorDash upped its price range in a filing on Friday. Airbnb, meanwhile, is also said to be planning to increase its pricing, which could give it a valuation of as much as $42 billion. Now, Joe Biden has picked Javier Becerra as his Health and Human Services Secretary. The California Attorney General will lead efforts to curb the coronavirus pandemic and to strengthen the Affordable Care Act. The president-elect's priorities in tackling the virus will likely include expanding testing, improving access to PPE, and distributing a vaccine. If confirmed, Becerra would be the first Latino head of the U.S. Health Agency. Shares in JD Health International have jumped as much as 27% in grey market trading in Hong Kong. Now that's today. The firm said the retail section of its offering, part of the city's biggest IPO of the year, was 422 times oversubscribed. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, President Trump and Senate Majority Leader Mitch McConnell are likely to back a $908 billion stimulus package. That's according to Senator Bill Cassidy, a member of a bipartisan group sponsoring the bill.
Now, neither have said, "Oh, we'll sign your bill." That's fair. We have final language. Our final language, Chris, will probably come out earlier this week. And so then people can look at it and we can modify it as needed. But the indications I get, the pain of the American people is driving this, and I'm optimistic that both those leaders will come on board.
Let's get back to Coco Agbo-Blois from Société Générale. Coco, when you look at some of the hope on a stimulus, of course it all depends on what happens also in Georgia and the Senate race, but what does the U.S. economy need right now?
Well, I think the U.S. economy clearly needs a short-term fiscal stimulus. So the number talked about between 500 to 900 billion, as opposed to the 2.5 trillion and over, because of the short-term sort of damage to demand. We see unemployment, even if it's been improving, remains pretty high. So I think what's important to bear in mind is similar to what F.D. Roosevelt said in 1933 in his inaugural address. There's nothing to fear but fear itself. And the vaccine brings huge amount of confidence, but this is only good for financial markets. And whilst the real economy is still pretty damaged at this stage. So further fiscal, that direct help to the consumer is key at this stage.
So what trade do you put on? Or what trades?
Yeah, so in terms of trades, if we assume that the vaccine ultimately bridges the gap between the short-term pain and the light at the end of the tunnel, we think being long equity baskets, because they're more precise in expressing the recovery from COVID. So these are tourism sectors, for example, fallen angel stocks that were in industry with high content intensity. Financials are sectors that are likely to do well. Curve steepeners as well, two stands to price higher inflation expectation likely to occur, and also long equity versus credit, because we still think that we will see a 5% default rate next year, as a lot of these broken business models are unlikely to survive even in a vaccine era.
Does dollar weaken from here?
Yes, so we remain pretty bearish to the dollar because in terms of the amount of issuance and liquidity that will be coming out of the central banks, it's likely to continue that momentum, and a sort of risk-on environment is typically dollar bearish.
So if you look at, the 2 10-year spread in the U.S., or is there anything in the U.S. that you want to be involved in?
Well, I think it's clearly sort of the value sector, which has underperformed quite a bit. So the Russell is a good proxy of that. But what's really interesting, and a lot of investors are spending a lot of time on, is the green transition. And the Senate runoff could lead to a scenario where the Democrat wins the 2 seats, even though things are pretty tight. So in that scenario, a President-elect Joe Biden could have more capacity to implement a lot of his green transition and priorities. And that could lead to a pretty sustained outperformance of ESG-related thematic and stocks.
And Coco, that's ESG-related thematics across the board. Europe was going to be the big proponent of this, but there are so many questions about the recovery fund, and I hear more and more that actually investors like Japan or certain parts of Asia, compared, also China, and certain parts of the U.S., but Europe a little bit less than they did 6 months ago.
Absolutely. So these are clearly questions in terms of short-term agreements, but I think that the trend is what investors care about. The European Recovery Fund really set the scene of a common goal and sort of not a fiscal path or sharing losses with the periphery, but at least the intent is there. And you don't necessarily need to have a recovery fund driving the green agenda or the ESG theme, because even when it comes to corporate commitment to having a more social, equal environment and climate change priorities, the theme has already started, and we can already see that green risk factor or valuation premium being reflected in sectors. So I do think that we see, number one, the flows being quite significant, and number two, which is quite interesting, is that this rotation out of quality into value is something that didn't hurt the ESG-related thematic, which still has been pretty resilient.
Would you, Coco, how do you actually play the ESG themes or thematics or climate change thematics in China? Is there, something that actually we should be looking at a lot more?
Well, this is a good point, because if you look at ESG factors in emerging market, generally speaking, they are not as strong as these factors in developed markets. Number one, because of reporting, but number two, in terms of where they're starting from. So there are two ways of looking at it. Number one, you could look at a screening of stocks that are improving their rating, number one. And number two, which is even more interesting, is looking at those companies that are producing the goods that are helping the energy transition. So sort of wind farm, for example, or all the commodities that will be used in the agenda around climate change are ways to essentially trade that thematic. So effectively, thematic baskets are the best way forward, because they are more precise than global or regional indices.
Thank you so much for the insight. Coco Agbo-Blowa there from Societe Generale staying with us. Now, we'll have a lot more, of course, on some of the ESG themes and investing throughout the week. Now, coming up, the United States is set to slap sanctions on more Chinese officials over Hong Kong. The details are up next, and this is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, this is the look for some of the markets looking at Brexit. We understand from the UK side that it's not going to plan. Now, I have to say we also understand it from the European side, but it seems that the UK counterparts are actually, playing or fighting. They're going as far as saying that talks could collapse in the next few hours. So we're seeing that play out on the currency markets. You can see cable at 132.65. Always good to also have a look at euro sterling. This is according to The Sun. Apparently the UK Prime Minister is ready to pull out on the talks. The million-dollar question is whether this is just to talk to their constituency back home. This is something similar that actually Mr. Emmanuel Macron, the president of France, was also doing. Anyways, you can see euro cable 0.9115. Now, the U.S. is preparing to sanction at least a dozen more Chinese officials over their role in the recent disqualification of Hong Kong legislators. That's according to people familiar with the plans. The move comes as Donald Trump continues to pile pressure on China on his final weeks in office. Well, joining us now is Bloomberg's China government editor. She's Karen Lee. Karen, great to have you here today. When you talk about escalation, is this it, or could we see more?
Well, what we're hearing so far is that Michael Pompeo will sign off on a list that includes high-ranking officials. And that makes sense if this is a move that is, in fact, intended to pile more pressure on China in the Trump administration's final weeks in office. And, of course, bearing in mind that previous rounds of sanctions have included senior officials like Hong Kong Chief Executive Carrie Lam. And while Trump indicated to aides in July that he did not, in fact, want to further escalate tensions with China, had ruled out additional sanctions on top officials at that time, we see this move now. And what's interesting to note is that before he said that in July, his team had actually created a list of officials that included someone as senior as Vice Premier Han Zheng, who's a member of the Communist Party's very powerful Politburo Standing Committee. So while we don't know exactly who's going to be targeted, we can speculate about some senior officials who haven't been sanctioned yet, and we can look at what this is going to mean going forward for the U.S. and China as the Trump administration winds up.
So, Karen, one of the things that we've been trying to figure out is how much can President Trump actually box in or really escalate to this feud with China to box in Joe Biden? What are the Chinese expecting of a Biden administration?
Well, all eyes are on what Biden's going to do with China. Most people do not expect him to back down, but people are looking to see if there's going to be a realignment in what has become a very fraught relationship in recent months. And everything that we're seeing today, any moves by Trump in the last months, all play into the two big questions surrounding U.S.-China ties at the moment. One is how much harder moves like this by Trump are going to make things for Joe Biden after January 20th. And what else Trump could be planning in his final weeks to hit China, to hit Xi Jinping before he steps aside.
Karen, thank you so much. Karen Lee there, Bloomberg China government editor. Now, we'll have plenty more, of course, on China and the U.S. as we're possibly expecting those sanctions as soon as today. It'll be extremely interesting to see exactly who they're targeting. The markets, a bit of a sell-off we're seeing. This is on the back of these trade tensions, being more concerning than they were last Friday. Also, Brexit. If you look at the conversation, it's not exactly how investors were hoping they would go. So that's also adding a bit of pressure to global stock markets. And you can see cable 132.58. Bloomberg surveillance continues in the next hour.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
On a knife edge, the pound sinks on reports that Boris Johnson is close to pulling out of Brexit talks. Michel Barnier says they're not close to a deal yet. The rollout begins. Coronavirus vaccines begin in the UK tomorrow. The US may follow suit by the end of the week if the FDA gives emergency approval as infections hit an all-time high. And relief bill optimism. President Trump and Mitch McConnell are said to be on board a $908 billion package. Negotiators are set to unveil details today in hopes of a deal before Congress breaks for the year. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Lisa Brownowitz in New York, Tom Keene with the day off. Lisa, I'm excited about the 2 hours ahead. I know there's a lot to talk about. There's Brexit. There's a couple of things with China and Hong Kong, with Mike Pompeo possibly putting extra sanctions. And then, of course, there's stimulus.
And there's a good reminder today that the world does not entirely revolve around pandemic. The risks don't entirely rest with the pandemic, the vaccine, the timetable there, but also these other percolating issues, whether it's trade tensions or whether it's Brexit, which goes to the heart of the uncertainty in 2021.
Yeah, I mean, there's a lot going on, and I guess this is the concern, is that you have a million angles of things that, you know, could turn out sour, and if they all come at once, this confluence makes it for messy markets. Now let's get straight to the Bloomberg. First word news in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Lisa. One Republican senator predicts that President Trump will get on board with a bipartisan $908 billion package for coronavirus relief. Senator Bill Cassidy told Fox News that Senate Majority Leader Mitch McConnell will back it too. Cassidy is a member of the group that's pushing the measure. President Trump's lawyer, Rudy Giuliani, has tested positive for the coronavirus. According to reports, he's been hospitalized in Washington. Giuliani's son says he's getting great care and feeling well. Giuliani has been leading the efforts to overturn the result of the election. In China, exports jumped in November by the most since early 2018. That's pushed its trade surplus to a monthly record high, and it underlined how global demand for pandemic-related goods is helping the Chinese economy rebound. And it's another potential blow to New York City's stature as the home of the U.S. financial industry. Goldman Sachs is considering plans to move its asset management unit to South Florida. Goldman's success in operating remotely during the pandemic has persuaded the firm's leaders that they can move jobs out of New York to save money. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. If you look at global stocks, there is a little bit of a downward movement. Now, let's look at what is happening in Europe. European stocks actually dropping, the pound weakening the most in 3 months. A couple of concerns out there. So Brexit talks could collapse. That's probably one of the #1 concerns, certainly here in the UK. But there's also talk about these sanctions that Mike Pompeo could put on Chinese officials. We understand through our reporting on the ground, Lisa, that they could also go quite up. And so that would possibly box in the Biden administration, certainly for the first couple of months, into a feud with China. On Brexit, I'm looking at pound 132.62 is the pound versus dollar, and then euro dollar, the one that pros look at 120.89. Lisa.
Yeah, and when you talk about all the turmoil about Brexit and trade tensions, you're looking at S&P futures that are down an entire 45 percentage points, 0.45 percentage point of a decline. In other words, not that big of a drop from all-time highs that we reached on Friday. Meanwhile, you're seeing the dollar gain just a touch versus the Chinese yuan, the offshore yuan, and this comes after hitting the weakest versus the yuan since 2018 on Friday. So coming off just a little bit with those trade tensions gaining steam, more than the better than expected export data out of China overnight. Italian 10-year yields hitting that record low 0.513%. The expectation that the ECB will do more as the euro area does not necessarily come to an immediate agreement on fiscal support, and copper off some of the recent highs in the post-crisis era as people take a look, Francine, at the possibility of a global recovery and perhaps have a little bit of skepticism, but just a little.
Yeah, just a little. I mean, we're Monday. Happy Monday. There's quite a lot of it to get through the week. It's, Monday in Europe, and there's, you're right, Christine Lagarde, and there's what the European Union will do in terms of the stimulus or not. And then we have stimulus in the U.S. with talks ongoing. Joining us to talk about all of this and to join the dots is Patrick Armstrong, his Perimi Wealth Chief Investment Officer. Patrick, thank you for joining us. A million things going on. It's Brexit, it's stimulus in the U.S., it's these extra sanctions on Hong Kong. The market's still nearing record highs. What will they look out for impetus?
The thing that the market's really latching on to is something that's looking almost certain at this point, that we do get a sharp recovery in the global economy in the second half of 2021. So with the success of the vaccines and number of vaccines all showing high efficacy, you can really put a base case of very strong economic growth in the second half of next year. Economy is reopening, getting past obviously the big headwinds of lockdowns and partial lockdowns, and that's the driver of the cyclical recovery story. You've also got fiscal stimulus, because although things are looking like they'll get good, they're not good yet. The economy still needs monetary and fiscal stimulus. It looks like we've got a deal in the United States of almost $1 trillion. So all of these things coming together create the bullish narrative, but there's some other minor things ticking away, I guess, as well, creating more short-term uncertainty.
Patrick, on the point that we're near a vaccine, how much is that a boost to the economy if we don't have the debt relief, or if we don't have some of the pandemic relief measures that are still needed in large parts of the economy in many countries around the world?
Well, I think we're going to continue to get them. Any politician knows you can't punish people who are unemployed due to this pandemic. You've really got, if you want to get reelected again in democracies, you've got to show you are willing to support the economy. So the Republicans were indicating they might be a little bit more hawkish on debt after it became apparent that Biden was the next president. But very important Senate runoffs in January in Georgia, and if you may swing voters away from Republicans if they're being too tight with the purse string. So I do think there's still going to be ongoing fiscal stimulus. It will start to wane in the second half of next year, but hopefully the economy is strong enough by that point and there's jobs growing again that we shouldn't need it.
How much is this fiscal support, Patrick, already priced in?
I think everyone expected some fiscal stimulus. I think getting close to the trillion is good news because Lindsey Graham and McConnell were both talking about debt and deficits in the days after the election. So getting to the trillion, Biden's characterizing it as a starting point, and there'll be more from there. We'll see. But very important. You need to have monetary policy working together with fiscal policy. I guess all the central bankers have been banging that drum now for months and months. We'll see how Yellen can do as a previous central banker. But it's very important. The economy is still so far below potential. Unemployment is still very high. I definitely need the fiscal stimulus in the coming months.
When you talk about the high unemployment rate and the fact that the economy is still struggling, I think about the fact that we're reaching record highs, at least on Friday, in equity indices around the world. And I'm wondering at what point the underlying economy will matter again when you look at some of these metrics versus the expectation for more fiscal support.
You have to be artistic to really justify buying a lot of equities right now because multiples across the world are at record highs. So the S&P 500's at 99th percentile on trailing earnings. It's at 99th percentile versus its history on forecast earnings. And it's at 100th percentile on price to sales, enterprise value to EBITDA. So unprecedented multiples at a time where we've got unprecedented low interest rates, I suppose, is the backdrop. So you you don't have many alternatives. I think that TINA acronym about there is no alternative really is working. It's very hard to deploy cash in safe assets because you're losing real purchasing power the longer you stay in more risk-free assets.
I love that, Patrick. You have to be very artistic. I mean, a lot of people on the markets, actually, contrary to popular belief, are very artistic. What will it take for a correction, Patrick?
A correction, I guess there's side effects to the vaccine, or there's a population that's just not willing to take the vaccine. Anything that creates a risk to that strong economic recovery in the second half of next year. So persistent unemployment, companies realizing that they can get by with less and not rehiring in line with expectations. There's still definitely risks there. The growth we are anticipating is also coming off a low base. So even getting 5% growth in the U.S. economy, which is a very strong number, still puts us below the trajectory we were on before the COVID pandemic. So we are getting growth from a lower base, but anything that hinders that potential growth, I think, could trigger a correction at these valuation levels.
Does copper need to correct? I wanted to ask you about an artistic trade, Patrick. I'm going to run with this analogy probably all day. But if you look at copper and some of the selling signals, is now the time?
We don't have a position in copper. We've actually bought some iron ore producers, Fortescue in Australia. If you look at Chinese iron ore demand, China's the map I suppose the world wants to follow in terms of an economic recovery. Chinese economy is doing very well post the pandemic. Manufacturing is very strong. Manufacturing globally is actually quite strong. So I think copper incrementally is part of the fiscal stimulus that will likely be used, building out infrastructure. It's part of the EV vehicles, all of those kind of things. So copper's probably run a little bit too far, as maybe a lot of cyclical assets have short term. But long term, if we do get back to that growth trajectory, I think these prices are about fair.
Patrick, thank you so much. Patrick Armstrong there of Plurimi Wealth stays with us. Coming up, we also talk with the London Mayor, Sadiq Khan. We'll talk to him about Brexit, about the tiering system. We'll talk to him, of course, about COVID and vaccinations. That's at 6 a.m. in New York. That's 11 a.m. in London. And this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Now, neither have said, hell, we'll sign your bill. That's fair. We have final language. Our final language, Chris, will probably come out earlier this week. And so then people can look at it and we can modify it as needed. But the indications I get, the pain of the American people is driving this, and I'm optimistic that both those leaders will come on board.
That was Senator Bill Cassidy, a Republican from Louisiana, talking about the fiscal support package that does seem to be gaining steam in Washington, D.C., which puts a strong focus on fiscal support packages that are being proposed both in the United States as well as the Euro region. Still with us, Patrick Armstrong of Florimi Wealth. Patrick, we were talking about how markets are depending on these fiscal support packages to pass. What's the deadline? In other words, what's the near-term risks of a market turbulent effort based on some of these deadlines and the talks that are ongoing in the EU as well?
I don't know if there's a specific deadline, but if you don't get the stimulus, it creates the risk of a downward spiral. So basically, the people who don't have jobs are relying on stimulus checks, things like that, then they can't pay their rent, and then the landlords have issues, and then when the landlords have issues, banks then have issues. So it's something that's a risk, but I don't know if there's a specific deadline. You do seem to be getting close to it. I think people are at as stretched as they can be almost. So it is needed soon. I don't think there's any disagreement, and that's why we are probably getting something bipartisan at this point.
Patrick, do investors care at all about the massive amount of debt that is building up in sovereign economies around the world?
It's something I look at all the time, and really almost have to ignore it unless you have a very long-term view, because it's not what's driving markets right now. Any buildup of debt is viewed as a positive unambiguously at this point. So any spending, the market's rewarding. It's a function of interest rates being zero, so that debt is essentially costless. There will come a point where interest rates rise, the curve starts to steepen, and then the massive amount of debt that has been built up we'll have to have an exit strategy, whether it's monetization or austerity, still to be determined. I think it will be the monetization direction that things do go.
Patrick, if central banks do much more from here, how painful will be readjustment once we get inflation, and how far away is that?
The good thing is that central banks, almost all of them, are indicating once there is inflation, that's not going to be the end of the stimulative policy. So Powell said the economy can run hot. There won't be any changes in the measures he put in place until there is inflation. It's hard to say when inflation will come. And I think it's going to be a transition of the policy right now. If you look at M2 growth in the United States, it's running at 24% growth over the last 12 months. So that's higher than money supply grew in the 80s when there was real rampant inflation. And policies right now, QE gets money in the hand of investors. So QE buys a treasury, and then that capital is deployed in another investment. I think if there's a transition in policies where money goes to spenders who are spending on goods, a Biden administration might facilitate that. That might be the very beginnings of some inflation. Anything that creates a higher cost structure as well, such as higher minimum wages, those kind of things also will provoke some inflation.
Okay, I hope you weren't thinking, we wouldn't talk about Brexit, that you'd get away with it. Are we going to get a Brexit deal, Patrick?
I think yes. So my base case is still there's an 11th hour and 59-minute deal, as the European way tends to be. Definitely risks of that. The Sun of all places seemed to have called that Bojo's indicated he'll walk away from talks if there's no progress. And sterling selling off, justifiably so. In our sterling portfolios, we've kept all our cash. We've moved it back into sterling in anticipation that there is some sort of deal. But you won't know until the last minute, obviously.
Wait, Patrick, did you move it into sterling today? In other words, are you investing on the dip?
Exactly. This morning, we didn't expect it to be dipping the way it is, but we've moved everything back into sterling now. We do expect there to be progress this week. EU leaders meeting on Thursday, Friday. That can go into the weekend, so I don't know what the official deadline will be there, but it does seem that this week is as late as it can go to get to what will be a final deal.
I'm assuming that it's into sterling and perhaps out of dollars. I could be wrong. There is an expectation in markets, a consensus that the euro will continue to strengthen versus the dollar based on the risk appetite in markets as well as ongoing stimulus efforts in the United States. Do you agree with that consensus?
I do. It will be interesting what other central banks do now. So if the ECB sees the euro at 121, is that a pain point where the ECB has to do more? They'll never target the currency rate officially, but all of the monetary policies, stimulative policies, weaken a country's currency when they put them in place. So strong currencies are a headwind for much needed growth everywhere in the world. And if the US weakens as it has been, everywhere else has some punitive measures on trade. And you may see more aggressive central bank policies everywhere in the world just to combat their own strength.
Patrick, does QE actually work anymore? We've had it for such a long time, and with such large amounts, at what point does it become negative?
I don't know the efficacy of QE anymore. It was QE1 was very effective, QE2 was less effective, and where we are today, it rewards speculators. I don't know if it creates any economic growth at this point. It gets money for free, and that's put into risk assets, and you're seeing credit spreads narrow, you're seeing share buybacks, all-time high multiples. So it's definitely good for asset prices. In terms for the economy, I think it has very little efficacy at this point.
Patrick Armstrong of Florimi Wealth, Chief Investment Officer, thank you so much for joining us. I think a lot of people are coming to the same conclusion that you are when it comes to quantitative easing, and yet expecting more. Coming up, Jens Nordvig, he is Exante Data founder and Chief Executive Officer. That's at 6 a.m. in New York, 11 a.m. in London. We'll talk about sterling, we'll talk about dollar, we'll talk about the road ahead. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. As early as this week, Facebook will be hit by federal and state antitrust lawsuits. Bloomberg has learned they'll accuse the social network of abusing its dominance and thwarting competition. The lawsuits will be filed by the Republican-led FTC and by a group of state attorneys general led by New York's Letitia James, who's a Democrat. Airbnb and DoorDash are set to begin trading this week in long-awaited IPOs. Both companies are boosting their price ranges as they headed into the final stretch of marketing their shares. They are now each expected to raise as much as $3.1 billion. IPOs on U.S. exchanges have already raised a record $156 billion in 2020. The pandemic has taught independent investment banker Paul Taubman a few lessons. The founder of PJT Partners sat down with Bloomberg for a rare interview.
The big lesson is liquidity. My hope is that companies will rethink what an optimal capital structure is and not price it to perfection or to the expected case, but will think a bit more about the tail risk and what can happen, because we're all seeing these black swan events happen with alarming frequency.
That is your Bloomberg Business Flash. Lisa?
Thank you so much, Ritika. Right now, taking a look at markets. You can't keep a good market down. In the U.S., S&P futures are lower, but off the earlier lows, down now less than 0.4%. I'm looking right now at the dollar, which is strengthening just a touch versus the yuan after reaching the weakest since 2018. Kind of interesting that the potential trade tensions seem to be overwhelming the better than expected trade data overnight out of China. Italian 10-year yields at that all-time low of 0.513%. And copper futures, you mentioned this earlier, Francine. I think it's interesting. A lot of disagreement over whether copper is going to surge, Dr. Copper showing economic recovery, versus whether you're going to see it cool as people start to right-size their expectations for the global economy, Francine.
Yeah, and actually there's a great chart pushed out by the Bloomberg, or on the Bloomberg, by terminal users, and Citigroup is saying, look, if you look at the technicals, it just looks overbought. All right, pound. I know, Lisa, you were waiting for the Brexit update because it's a complete mess and we don't know where we are, but pound is definitely slumping. Investors fearing a breakdown in talks. Now, I would caution, just a word of advice, that they are also speaking to their own constituencies. So we know that a British official warned that talks over a future trade deal with the EU could fail. The Prime Minister, according to The Sun, is also ready to walk out. Fine. He probably needs to say that at home. I don't know whether that means that a deal is actually off the table, but certainly the pound is sliding both against the euro and the dollar. And then I'm looking at the U.S. 10-year yield. And actually, if you look at European stocks, it's really banks and retailers leading the loss on that index. Coming up, we'll talk about Brexit. We'll also talk about U.S.-China and whether President Trump is really boxing in the Biden administration in a feud with China. We'll be talking to Volfango Piccoli, Teneo co-president. He's coming up shortly, and this is Bloomberg.
Retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings. partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. Lisa and Francine from London and New York. Tom Keene with a well-deserved day off. Now, Brexit negotiators are striving to finalize a deal by this evening after resuming talks yesterday. The chief negotiator, Michel Barnier, threw cold water on news of nearing a breakthrough on fisheries. Meanwhile, Johnson says he's ready to walk away from talks. Well, joining us now is Volfango Piccoli. He is Teneo Intelligence Director of Research. Volfango, thank you, as always, for coming on Bloomberg Surveillance. When you look at where we are, it's fraught, it's difficult negotiations. Both sides, or certainly the French on the EU and Boris Johnson, threatening to walk away. Is this just briefing their own constituencies at home, or could we really not see a deal?
I think there is a bit of both, in the sense that there is lots of politics being played, mainly from the UK side as well, but also the French politics is not particularly helping on this front. And also there are some difficulties in the talks. I think, it's certainly not about fish. It's much more about the level playing field and the governance. And the clock is ticking. In our view, a deal is still within reach. And yes, this is a crucial week, but it's been another crucial week of many that we have seen in the past. The bottom line here, the deadline is the 31st of December.
Volfango, we're just getting some headlines from our sources. According to an EU diplomat, the EU and the UK have not bridged significant differences. Some progress have been made in Brexit talks, but not decisive. Will both sides compromise to get a deal? I know there's a number of red lines on each side. If this is not about fishing and fishing rights, who will have to give in more in terms of governance?
To a great extent, is going to be the UK to take a decision here. A decision that in the domestic debate here has been framed as a sovereignty issue, so has become politically charged. But it's clear that while on the fishing front, there are ways to go around it, basically, and especially to defer a final decision. On the other two issues, the issue is much more complicated and much more political. That is why I think here, assuming that they are struggling still in Brussels today, the next signpost will be the negotiation between Johnson and von der Leyen that is supposed to take place later today. So let's see whether that happens. And also the other issue from the EU side here is also what happens to the internal market bill, which is coming back on the agenda later today in the Commons, and then to the taxation bill that is coming on Wednesday, because also those two could throw a spanner in the middle.
It always takes two to tango, right? And we've been dealing with these negotiations for years now, and it feels like they're never going to end. But who's at fault here? Who do you think is sort of the main sticking person in these negotiations that's taking it to the 11.999 hour?
Well, first of all, let's be very clear. These they were set to be extremely complex negotiation from start. Then the messy politics on the UK side has complicated things. We've seen, election, changes of government, some back and forth there. So again, but on the other hand, it was clear from the beginning that the key leverage was with the EU, which has maintained a fairly strong, consistent and united front, despite the recent noise from Paris. And the big ask was on the UK side. So it's not particularly surprising here that Boris Johnson is still struggling to make up his mind and to convince many within his party about this. It's also clear that the EU will be the last one to leave the table at the end of the day. The EU will not leave the table until the 31st of December. So very much depends on London at this point.
So in other words, if I'm reading into what you're saying, the UK has much more to lose than the EU here, and so it's really up to them to adhere to certain concessions. What kind of political support does Boris Johnson need at this point to get something through?
I think when we talk to lose here, we talk about politics at the end of the day, because, economically, it is very clear that without a deal, the UK will suffer. Then depends on you which number you want to put on it. So it's a political decision, it's a political cost associated to it potentially for Boris Johnson. So that is a delicate calculation that he has to make in a context where he has a country that is one of the worst hit, at least in the OECD, apart from Argentina, by the pandemic crisis. The pandemic is still around. So I think we need to look at this in a broader context, despite the importance of the intra-Tory party politics about Brexit.
So, Wolfgang, what does his future look like? Boris Johnson, will he, does he remain prime minister? And if we have to look at negotiations and Brexit through that lens, what's your insight on it?
As I said before, in our view, a deal is still more likely than not. I don't know whether it's going to be this week or next week or on the 31st of December. And on the other way around, the advantage that Boris Johnson has, that still within the party is still popular. There are no potential contenders at this point. It's that there isn't a significant risk, despite the recent noise that we have seen in the Commons with defection over a couple of difficult pieces of legislation there. So it's, I think here he needs to show that he's playing hardball until the last minute. They will need to get some concession. And again, let's be very clear, even if we get a deal done by the end of these months, this conversation will continue for the next 10 years. Because unwinding the whole relationship will take a very, very long time. So this is an appetizer, if you want to put it that way.
Great. I hope our Brexit editor is watching, looking at it, that he'll have to deal with this for another 10 years. Wolfgang Piccoli there of Teneo stays with us. Wolfgang also with really the best library in the business. I have a side job as, room rater, Lisa. Now
really?
Let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Joe Biden has chosen California Attorney General Javier Becerra to be his Health and Human Services Secretary. Becerra's job will be to curb the coronavirus pandemic and expand the Affordable Care Act. Becerra is a former congressman but has little experience in the health industry. U.S. Attorney General William Barr is considering whether to step down before President Trump's term ends next month. That's according to the New York Times. The president was angered last week when Barr acknowledged that the Justice Department found no widespread voter fraud in the election. And the Trump administration is set to sanction at least a dozen more Chinese officials over Hong Kong. Bloomberg's learned they're being targeted for their role in the recent disqualification of Hong Kong legislators. Their departure fueled concern about the city's autonomy from Beijing. And a British official warns that talks over a trade deal with the European Union could collapse today unless there's progress in the next few hours. Prime Minister Boris Johnson is due to speak with European Commission President Ursula von der Leyen this evening. Another British official says that could be make or break movement. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Lisa.
Ritika, thank you so much. Now, coming up in the next hour, we continue tracking COVID-19. This is also a day before we are due to have a vaccine in the UK, of course, only for certain people in the population. We talk with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. That's at 6:30 a.m. in New York. That's 11:30 a.m. in London, about an hour from now. This is Bloomberg.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Lisa Abramowitz in New York, and Francine Lacroix in London. Tom Keene brining a new turkey for Christmas. Still with us is Wilfongo Piccoli. He is Teneo Intelligence Director of Research. And Wilfongo, not only do we have Brexit ongoing, we also have the question of the 2.2 trillion euro plan, $2.2 trillion deal plan that's being negotiated by the European Union. Some disagreement over whether that can go through. Do you think, from your vantage point, people are too complacent about this actually passing, given some of the disagreements inside the European Union?
I think if there is an element of complacency, it's about the second stage, and I will get there. As to for your question, Lisa, I think a deal will be eventually reached. When we look at the objection by Hungary and Poland, again, and there are two different kind of domestic politics playing around this in both countries, the reality is that Hungary and Poland are set to get 180 billion euros from the European Union over the next 7 years. It's hard to see them basically saying no to that money. So it's a complicated negotiation. It might cause further delays down the line, but we will get there. For us, when we look at the recovery fund, the element of complacency here is about the ability of countries to actually absorb this money and make the most out of that. And on that front, we are concerned about countries like Italy, to a certain extent Spain as well. That is an area where I think the market has been somewhat neglecting.
Well, build on that, please, Wilfongo, this idea that perhaps there could be inefficient uses of this money. Like what?
Well, in the sense that so far only 8 countries have presented the initial draft of the National Resilience Plan, even if the Commission asked them to do that. Italy has put together a piece of paper that is worth pretty much nothing so far. Italy already is normally able to absorb less than 40% of the standards funds from the European Union. There is the absorption capacity, if we want to call it that way, is an issue. Is an issue in terms of putting together plans which are credible, which will overcome potential resistance from countries like the Netherlands. We have a critical election at the end of March, and then will actually really help the economy, and it will not basically be money that is just sprayed around by politicians to consolidate their support, because that seems to be the plan in Rome right now, for example.
Vuvango, a lot of people are over 2020. We're probably part of those. So if you look at 2021 and some of the risks out there geopolitically, like today we could see Mike Pompeo impose extra sanctions on very high-up Chinese officials. Does that box in the Biden administration? Do you look at 2021 for U.S.-China tensions? Is it for the Middle East? Is it for Europe? Like, talk us through the main, maybe one or two critical points that we should be really focused on.
I think in terms of U.S.-China, there will be loss of continuity in the early days of the Biden administration. And it's not because it's been boxed in by Trump. I think Biden here has been boxed in by the bipartisan commitment in the U.S. to adopt this confrontational stance towards China. There are some areas where he can make some moves, for example, some tariff exemptions, or allowing American companies to export technology to certain Chinese companies, or granting more of these licenses. But Biden has to be very careful, because he cannot be seen as giving to the Chinese in exchange for nothing. So that area will be quite a bit of continuity. I think there has been too much optimism about the US-European relation. Obviously, Biden election has been welcomed by most in Europe, but the reality here, the agenda is fraught with difficulties. Taxation of digital companies, dealing with China, for example, issue of privacy and data regulation, trade. So yes, the cosmetic, the choreography around the bilateral, the transatlantic relationship will improve dramatically, but whether it will be able to deliver in a meaningful way is very, very questionable. In our view, next year, based on what we have seen so far this year, there are two areas where politics and political economy will play a key role. First of all is about the role of the state. The state is a big winner of this crisis. So the question was, what happens in 2021? Will the state give back the powers that it acquired over the last 12 months or not? Powers that goes from your basic liberties to the role of the state in the economy. So there will be a huge question mark. And the other one about fiscal policy, because if we assume the monetary policy has run its course, the question becomes on the fiscal policy. And fiscal policy, by definition, is much more political, more opaque, and more difficult to follow. So that is where politics will play a key role in our view.
Thank you so much for all of the insight. Vuvango Piccoli there, Teneo Intelligence Director of Research. Now, with the Bloomberg Business Flash in New York City, here's Ritika Gupta. Hi, Ritika.
Hi, Francine. A blank check firm led by billionaire Bill Foley is nearing a deal to merge with online payments firm PaySafe. Bloomberg's learned the deal would create an entity valued at about $9 billion. That would make it amongst the largest blank check deals this year. PaySafe is backed by Blackstone and CVC Capital Partners. The largest U.S. chicken restaurant chain, Chick-fil-A, is suing top poultry producers for alleged price fixing. Tyson Foods, Pilgrim's Pride, and Sanderson are amongst those named in the suit. Chick-fil-A says they considered or conspired to keep prices high. Tyson says the claims are unfounded. The suit is the latest in years-long antitrust litigation over chicken prices. And UBS Chairman Axel Weber doesn't expect his bank to combine with Credit Suisse anytime soon. Weber spoke with Bloomberg News.
It's always accretive if two domestic banks talk about mergers, but they're very, very hard to implement. This is a very unusual time. This is very high uncertainty, and probably in such a highly uncertain environment, such talks would be much more difficult. So I don't expect these things to happen.
Over the weekend, Credit Suisse Chair Urs Rona said that a merger wouldn't be unreasonable. And that is your latest Bloomberg Business Flash. Lisa?
Thank you so much, Ritika. Coming up in the next hour, Terry Haynes, Pangea Policy Founder. That's at 6:30 a.m. in New York, 11:30 a.m. in London, talking about that fiscal support package being discussed in Washington, D.C. From New York and London, this is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes. When you call somebody, any head of state in the world, how hard is it for you to get anybody on the phone? I assume not too hard.
I would say it's not too hard, but sometimes it takes a week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The president has the right to pursue every legal recourse to make sure that this was a free and fair election in Georgia. And we know that these audits have turned up thousands of votes that were initially uncounted. And I've called for a signature audit. And the buck stops with the Secretary of State.
They're wondering when in the world are they going to get some COVID-19 relief? They haven't gotten any from Kelly Loeffler in months. And when she had a chance to stand up for ordinary people, she thought $600 was too much. Meanwhile, she was busy dumping millions of dollars of stock, profiting from a pandemic. Who does that?
Well, that was Georgia Republican Senator Kelly Loeffler and Democratic challenger Raphael Warnock. During the Senate runoff debates, Democratic win could flip the Senate. Well, joining us now is Marty Schenker, Bloomberg's Chief Content Officer. Marty, great to speak to you. We have to talk about China. We have to talk about a number of things, including pardons. But if you look at the Senate race in Georgia, how's it going? Is it, you know, the election is rigged narrative, or is there another narrative that's taking more place?
Well, that's the real question, Francine. You know, a lot of the coverage is focused on Donald Trump's claims that the election was rigged and that it was fraudulent in Georgia. And there's speculation that that's going to depress GOP turnout. That could threaten the Republican chances in Georgia and the Senate majority for the GOP.
If the Democrats win Georgia, Does it mean we'll have a much bigger stimulus bill? What are, if you look at what the market is looking at, how much of a game changer will this actually be?
Well, I do think that obviously Joe Biden's agenda would be exponentially made easier if the Senate were to flip to the Democrats. And the prospects for stimulus, a second stimulus beyond the one that they're looking at right now, would improve dramatically. I think it's an uphill battle for the Democrats. I think it's going to be very difficult for them to gain both of those seats.
Is President Trump and his efforts to try to garner support for the Republicans in Georgia helping or hurting?
Well, Lisa, that's a real question. He had two sort of combating messages when he went down there on Saturday. One, telling all the Republicans to register and vote, and at the same time saying that there's nothing but fraud involved in the Georgia election process. So it's really questionable how that's going to cut.
There's also a question about President Trump's support of the fiscal support package, the $908 billion bipartisan agreement that is being drafted currently in Washington, D.C. Is President Trump more okay with the idea of financial aid to state and local governments, which was the main sticking point between Republicans and Democrats for a long time?
Yeah, that is the real question. His kind of casual nod that he would support whatever the Senate and House come up with does not show he really truly knows what's in the bill. And there is significant state and local aid in the compromise. And the question is, will, at the end of the day, Donald Trump sign that legislation? And if he doesn't, is there enough support to override a veto?
Marty, through our own reporting, we're also expecting Mike Pompeo to put extra sanctions on higher-ups in China. In China, how difficult will that be for President Biden come January? How much does that box in the Biden administration?
There's some narrative that says that for every step that Donald Trump takes against China, it actually increases Joe Biden's leverage with the Chinese when he takes office, that he can sort of use those as negotiating chips to gain some advantage. But it definitely does tie his hands somewhat when he becomes the president and for his State Department to deal with China. There's no question about it.
Marty, how much of our reporting will focus on Rudy Giuliani and the fact that he's contracted COVID? I know a number of people that he's seen now have to isolate. Does that change anything in the immediate term?
Well, his probably limits his TV appearances, and obviously he's not going to be showing up in court in any of these cases, which he is kind of universally lost time after time. So I don't think we're going to spend a lot of time covering Rudy Giuliani. I mean, we all hope he comes through this in fine shape, and so far most of the people around Trump have. But it's just going to sideline him as his lead spokesperson for these fraud claims that Trump is pursuing.
Marty, thanks so much. Marty Schenker there, Bloomberg's Chief Content Officer. Nice and early up for us over in Washington. Now, coming up in the next hour, we'll talk, of course, about the markets. We'll talk about Brexit negotiations ongoing. Very difficult is what we're hearing from both sides. We'll also talk to Sadiq Khan, the London mayor. We'll talk about COVID, lockdowns, reopening, and we'll talk about Brexit and what that means for the City of London. That's coming up shortly, and this is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
On a knife edge, the pound sinks and reports Boris Johnson is close to pulling out of Brexit talks. Michel Barnier says they're not close to a deal yet. The rollout begins. Coronavirus vaccines begin in the UK tomorrow. The US may follow suit by the end of the week if the FDA gives emergency approval as infections hit an all-time high. And relief bill optimism. President Trump and Mitch McConnell are said to be on board a $908 billion package.